Well, Jerome Powell just spoke, and markets are pissed. There's a really simple reason why markets are pissed, and we're going to explain not just what Mr. Powell said, but why the Qs might be slipping, why potentially we're seeing this sort of downtrend that we've been seeing on Bitcoin. We'll touch on that as well, but also why we're seeing yields stabilize around that 4.15, 410 to 415 level. What's going on? We were as low as 4% last week during the Fed meeting. Well, remember, quick recap. Last week during the Fed meeting, we said that if Powell was neutral, we would end up seeing Treasury yields move from 4 to 4.15, which is exactly what happened. Today, Powell was unburdened by what has been. See, when Powell speaks at the FOMC, he has to provide consensus and show that, hey, we're all working together here. So he really tries to give you the view of everybody on the committee. Today was an opportunity for Powell to give you the unvarnished version of his own view, kind of like how Myron or the others go on CNBC and talk. This was an opportunity for Powell to give us his own view. And there was a hope that Powell would reveal his dovish true self. And what we got? Well, first of all, we're a host of really bad questions. I'm sorry, the interviewer. We need to work on better questions. Okay, next time call me and we'll work on better questions because those questions weren't that good. But second, we really didn't get a dovish Powell here. We actually just got a reiteration of kind of like a, yeah, man, we don't really know what's going on, bro. Like, this is some unusual crap, whatever, man. That's kind of what we got, which isn't what the economy or the stock market wanted. The stock market really wanted, yeah, you know, we're reiterating, it looks like we're on the course for 2 more rate cuts this year. This, especially after Bostic and others from the Fed are like, oh, no, maybe one and done. That's it. We don't even need any more rate cuts. We really need to see the labor market roll over before we do any more rate cuts. Well, we didn't get a reiteration of any more rate cuts today from good old Powie Wowie. All we got are Disney raising prices of Disney Plus. What the hell? It's all right. You can still use the coupon code MeetKevin to get into the, or coupon code Daddy's Back to get into the Meet Kevin membership, where we do our alpha report every single morning before the market is open. But that expires on Friday. Okay, now that said, which means the price is also going up on Friday. That said, Powell didn't give us that dovishness that a lot of folks were hoping for. We got neutrality. We got the following. We got downside risk to employment prompted last week's cut. There's no risk-free path. Old news. Consumer spending has slowed. Okay, that doesn't sound great for earnings. So where are the rate cuts? Well, we're in an unusual and challenging environment with both declines in supply and demand for workers. Okay, so where are the cuts? Nah, we don't know, because even though the labor market is less dynamic, we have numbers that give us mixed signals. See, we have the job creations that are down, but job openings are sideways and unemployment claims are sideways. Can somebody tell Powell, by the way, that unemployment claims are a super duper lagging indicator, and unemployment claims usually spike only when you're in the depths of a recession, not before that, but whatever. So again, you got this sort of like, yeah, we got big signals, things are meh, but we don't even talk about rate cuts. There was no talk at all about rate cuts. The lady asked dumb questions. Oh, so what are you going to do all later today? And Powell's like, oh, I'm going to work on my way home on the plane. Like, who freaking cares, woman? Anyway, Powell says goods prices are rising, but the prices largely reflect increases because of tariffs, not some kind of broader supply pressures. So he does talk down inflation, which is good. It's probably why bond yields are ticking down a teeny bit, because he really talks down inflation, and he kind of reiterates that inflation is going to be transitory. Now, he says this in a different way, which is worth remembering. The way he says it now is he says the actual effects on inflation are very modest so far from tariffs, maybe 0.3 or 0.4% of 2.9% PCE, so a small fraction. The pass-through has been later and less than expected. Both of those things obviously very bullish. He also says that tariff impacts will likely be spread out over the next few quarters, but long-term measures of inflation expectation do not think that inflation is going to increase, and we don't think that the long-term results of tariffs will lead to any kind of longer-term increase in prices either. That's just a rebranded way of saying these tariffs too will be transitory in the nature of inflation. So all of this to say that, he doesn't give us concern about inflation. He says, yeah, there are things to watch in the labor market. Layoffs are low. That's sort of a hint that, hey, if layoffs take up, we're screwed, which is true. But he tells us, but there are no signs really that that's going to happen right now. Talks about the beige book, says the economy is growing, AI is booming, no red flags in any of the different sectors within the country in the beige book. Says, yes, hiring rates have dropped and job creation rates have dropped. But again, people are just in a low hire, low fire economy, maybe because of uncertainty around policy and the long-term impacts of the big, beautiful bill or clarity on tariffs. A lot of people actually say that uncertainty is a bullish catalyst now, because now we have the text of the big, beautiful bill. Like, we've got a bunch of new lectures coming out probably in about a week or two here on tariffs and the big, beautiful bill, and like how to take advantage of the tax initiatives that came from the big, beautiful bill. That's going to be in the Trumponomics course, where we're adding a bunch of tax moves for the end of the year. The course itself could be a tax write-off. But anyway, there are a lot of people saying that those, like, the reality that we know what tariffs are now, we see what some of the early impacts are, and we know what the tax plan is, are enough to actually remove uncertainty from the market, which could lead to bullish moves to the upside. So, in other words, people look at uncertainty fading as bullish, Powell being neutral as bullish. Overall, this is pretty decent. I mean, the Q's hit our price target of 600, which was our course member Alpha Report price target over the last few weeks. Freaking nailed it. Anybody who played 3-week calls would have made some big dollar hollers on that. But we also cautioned that, we got to be careful between, this week, frankly, and the beginning of October, because you do have a lot of catalysts. Not only Powell speaking today, but you've also got October 1st ADP, October 3rd, we're going to get the BLS jobs report, hoping to get a rebound to about 50,000 jobs. We'll see if we can pull that off. Obviously, we're looking for that Doge impact as well, which we think will be mostly adjusted out. But there are a lot of catalysts coming within the next 2 weeks here. So nervousness around government shutdown combined by jobs numbers, Challenger reports, PCE inflation, JOLTS reports, all these data sets coming out over the next 2 weeks is going to create a little bit more of a tentative trading environment. And that's probably what we're seeing right now, given that Powell did not reiterate the very 3 rate cuts that were forecast in the summary of economic projections. Now, I know technically it's not a forecast, but I mean, think about it. We got a dovish statement. Oh, we're going to do 3 rate cuts, and Treasury yields drop below 4% for a moment. Then Powell is super duper neutral. Treasury yields up to 4.15. Okay, great. Then we get Fed speakers that go, it's the labor market weakens more. We're done. We're not doing any more cuts. And then today you got Powell going, we don't really know what the hell is going on, man. This is unusual, friends. So what are you going to do about it, Powell? I'm going to ride my bike. That's basically what we got. And I think that's why the market's a little pissed right now, just in the short term, because it's like, all right, Powell didn't give us any clarity. So that now moved Powell as a catalyst to the data. Data dependent. If only we had the Halo guy to tell us that.
Data dependent.
All right, fine. So this again shifts the catalyst for gains, or hopefully to jobs. We already know this is going to be a big deal, but really, Powell talked more about how people saying he's political is a cheap shot than talking about rate cuts. He did also say that a reasonable base case would be that the tariff impacts will be done by the end of 2026. But beyond that, nothing. I mean, we got Donald Trump right now saying that NATO countries should shoot down Russian planes if they enter their airspace. Great. That's what we need, Trump. World War III. Whatever. All of this makes me just want to use a coupon code somewhere. If only I could use a coupon code somewhere. Oh, what do you know? MeetKevin.com and use coupon code Daddy's Back. So that's basically what Powell said. Honestly, not that big of a burger, okay? It was a punt. People were hoping for dovishness, including myself. We got Nothing.
knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.